Time now for our calls of the day. First up, Boston Beer shares selling off today and down over 40% this year. Cowen downgrading the stock today to underperform, saying it could drop 30% from here as hard seltzer sales slump. Tiffany, you own it.
Yeah, this is really hard to watch, Frank. It's actually down about almost 34% year to date, and they really are the market leader in seltzer. But as you mentioned, sales in seltzer have been declining, and now they have competition with things like White Claw. So, growth in that category for them was 67% from 2019 numbers. And I say really only because on average in the past year, actually through the pandemic, they've been doing about 180% growth in that category on average. So maybe it's a sign that, summer's coming to an end and people aren't drinking seltzer, but it's just a little bit hard for me to wrap my head around because I would imagine people would still be drinking beer. So I'm just keeping my fingers crossed and hoping that they rebound.
Yeah, sales definitely slumping. One key thing here, spirit-based seltzer. Seltzers made with actual spirits up 133% over the summer, according to Jeffrey's notes. So a lot of people maybe not liking those malt-based seltzers. All right, next up, Wells Fargo.
Too many carbs.
Next up, Wells Fargo upgrade.
Too many carbs.
I got to cut back. Wells Fargo upgrading media and entertainment to overweight. A few of the stocks they're bullish on in that space include Viacom, CBS. Jim, you own Viacom.
Yeah, I think this is a very unrecognized gem within the media space, and it really comes down to the streaming numbers. Right now, they have 42 million subscribers at Paramount Plus. That's probably going to be close to 50 million by year end, and maybe more than that if they get a carrier deal. They've done some tie-ups with Comcast internationally that I think bodes well in that regard. They have another 52 million at Pluto TV, and the point I'm driving at here is this is actually serious throw weight in terms of subscriber numbers. You may also recall they did a balance sheet shore up in the beginning of the year when Archegos shot the stock to $100 a share. They raised $3 billion, so they're sitting on $5.5 billion of cash with which to execute their strategy. Whether they execute it alone or get bought out, either way, this is really an undiscovered gem.
All right, there we go.